The Federal Open Market Committee statement overnight extended the dollar's weakness against the euro briefly, but it quickly stabilized and recovered. However, the close above the 1.35 level in euro-dollar carried some larger bullish implications. Meanwhile, the breach of the 0.91 support in US dollar-Swiss franc also indicates more near-term weakness ahead. Against other major currencies, the dollar isn't that weak at all. Aussie dollar US dollar has indeed breached the 1.0384- support today, while will likely bring a deeper sell-off. Dollar yen lost some momentum as the yen recovers on profit-taking. But there is no sign of reversal in either dollar yen or euro yen as of yet. A number of important economic data will be released before the weekends, including personal income and spending today and non-farm payroll and ISM manufacturing tomorrow, with much volatility is anticipated. As expected, the Fed maintained the base of asset purchases at $85 billion and left the policy rate unchanged near 0%. There were few changes in the policy statement, yet, policymakers noted that growth in economic activity has paused in recent months, suggesting the monetary stance should remain accommodative. The central bank should remain in a wait-and-see mode so as to monitor the impacts of fiscal austerity, in particular expiration of the payroll tax holiday expiration. Separately, the Reserve Bank of New Zealand delivered a more upbeat economic outlook for this year. On the data front, Japan housing starts rose less than expected by 10% year-on-year in December, while industrial production also rose less than expected by 2.5% month-on-month. UK GFK consumer sentiment improved more than expected to -26 in January, and nationwide house price rose more than expected by 0.5% month-on-month. Australian import price index rose less than expected by 0.3% quarter-on-quarter in Q4. German retail sales dropped more than expected by 1.7% month-on-month in December. German employment and CPI will be released later today. In the US session, the main focus will be on personal income and spending, which are expected to grow 0.8% and 0.3% in December respectively. Initial jobless claims are expected to rise back to 355,000 in the week ending January 27. Chicago PMI is expected to be relatively steady at 51 in January. Canadian